Hey there, and welcome to a deep dive. We're about to jump into the stack of research and analysis you've shared with us, pulling out the really essential insights to get you up to speed on a very specific, very interesting market.
Yeah, our mission today is really to unpack this in-depth look at the Bangsar residential property market. We're focusing specifically on the outlook for, say, 2025 through 2028, based on that comprehensive report you provided.
Right, and this report it's packed with data, loads of analysis, so our goal is to help you cut through all that. We want to help you really understand the current market dynamics, peel back the layers on why Bangsar holds such high value,
Hmm.
and really dig into the specific opportunities and maybe considerations presented by those top new developments launching soon.
It's definitely a deep dive into Bangsar's unique status. I mean, it's
Yeah.
often seen as this particularly resilient, high-value enclave, even within the broader Malaysian property market recovery.
Okay, yeah, let's unpack this.
So maybe zooming out just for a second first, the national property market, it's showing pretty clear signs of sustained recovery right now. Positive growth. It's quite a favorable environment overall.
And the report gives us the numbers for that. Like nationally, transaction volume saw a healthy 6.2% year-on-year increase.
Yeah.
And transaction value surged significantly, 14.4% in the first 9 months of 2024. That's real momentum.
And the residential sector is definitely the engine here,
Yeah.
accounting for nearly 62% of all real estate transactions.
Right.
And if you look just at residential value, that was up over 10% in the first half of 2024. So solid.
Plus, you've got that stable monetary policy backdrop, the OPR, the overnight policy rate, holding steady at 3.00% since, May 2023?
Since May 23. And then there are supportive government initiatives too, like the Housing Credit Guarantee Scheme mentioned in Budget 2025.
All that kind of builds a positive foundation, doesn't it?
It does. Now, when you zoom in closer, Kuala Lumpur and the Klang Valley, the strength there is even more, exceptional. KL residential transactions, they saw a 5.5% increase in volume in Q4 2024. But the value jumped an impressive 16.6% in that same period. Big difference.
Wow. But okay, here's where Bangsar really stands out, according to the report anyway. It's described as this uniquely resilient micro market.
Yes, exactly. Despite broader market, ups and downs, Bangsar just maintains this persistent, steady demand. And crucially, this is paired with very limited new supply, especially for certain types of property.
Right, like landed.
Well, granted, yeah.
Yeah.
That dynamic, it acts as a powerful insulator. It protects values, keeps demand levels high.
You can really see that resilience in the numbers provided, can't you? In Q4 2024, the average transacted price for high-rise units in Bangsar grew a solid 3.6% year-on-year.
Which is good, but what's really fascinating here, I think, is that average rents grew even faster, 4.8% over the same period.
Okay, so rents outpace prices. What does that tell us?
Well, this stronger rental growth, it points to something critical. There's incredibly strong, almost you could say, inelastic demand for the Bangsar lifestyle itself. People aren't just deciding based on pure financial metrics. They fundamentally want to be in Bangsar.
And that deep desire, it doesn't just prop up property values, it actually boosts the rental yields, which cements its status as like a top-tier location that holds up even during market dips. The report noted that from past cycles too.
Right. So understanding why that demand is so strong, so enduring, that's key. The report really highlights that Bangsar's premium valuation comes from it being a genuinely self-contained neighborhood, a real ecosystem.
Yeah, and the data backs that up, the stickiness idea. It says residents tend to travel mostly within Bangsar on weekends. That's pretty significant, suggests the neighborhood really meets their needs.
It's more than just being close to things. It's a convergence of key factors. First, you've got unmatched connectivity. Being near the LRT Bangsar station and the MRT Pusat Bandar Damansara station, that isn't just a nice to have, it's a cornerstone of value, a prime transit-oriented example.
Okay. Then you have those concentrated lifestyle and commercial hubs, right? Premier shopping like BSC, Bangsar Village I and Thai, plus being super close to gardens in Mid-Valley. And of course the Talawi area, all the cafes, bars, restaurants. It just makes it a happening place, doesn't it?
Definitely. And it balances that lifestyle buzz with essential infrastructure. Top amenities like Pantai Hospital, Kuala Lumpur, Sri Dasmish International School, things that make it incredibly practical for affluent families, whether they're local or expats.
You put all that together, and yeah, it creates a magnet for a specific group. High net worth individuals, expats, affluent young professionals.
Exactly. Which means for investors, there's a consistently deep, high-quality pool of potential tenants.
And that's fundamental support for the market's stability and value retention. Makes sense.
Yeah. Now, the report looks at Bangsar's property market mainly through two different segments, landed and high-rise. And this split, it's basically just a result of the severe lack of land there.
That's correct. Landed properties, they define so much of Bangsar's established character. They make up about, 70% of the land use, contributing to that mature, low-density feel.
And because there's almost nowhere left to build new landed houses, these homes, whether they're bungalows or terrace houses, in those really sought-after areas like Bangsar Park, Bukit Bandaraya, Bangsar Baru.
The classic spots.
They're basically treated as trophy assets now.
Yeah.
It's about scarcity as much as it is about having a house.
And the prices absolutely reflect that. The median price for all landed properties in early 2025 was around RM 1.447 million. But dig a bit deeper. Bungalows in Bukit Bandaraya hit a median of RM 2.75 million.
Wow.
While terrace houses in Bangsar Park, they typically range from RM 1.15 million up to maybe RM 1.6 million. And the historical performance is pretty remarkable, too. Some types of landed here have appreciated nearly 240% over 2 decades. That's huge.
It really is. Something you don't see just anywhere. So on the flip side, given those land constraints, the high-rise segment is where all the future growth and, critically, the new supply is concentrated. Building up is the only way.
And the market seems to be embracing it. Stratified property transactions were up 12.2% in volume and a significant 25.2% in value in the first 9 months of 2024 in KL.
Yeah. High-rise developments cater directly to those modern demands. Security, shared facilities, the convenience of a lock-and-leave lifestyle.
Yeah.
Appeals to busy city dwellers, non-resident owners.
But the report points out something interesting. There's a kind of strategic segmentation happening within the high-rise market itself. It's not all just one thing.
Yes, developers are being very deliberate, targeting different slices of the affluent market. You've got what the report calls value luxury projects. Examples cited are like Residency 38 and River Park. These are often maybe on the fringes of core Bangsar. They tend to feature smaller units, and they come in at a, let's say, more accessible price point. Their focus is heavily on connectivity, transit, or highway access, targeting younger professionals, maybe investors looking hard at rental yield.
Got it. Then you have the prestige luxury ones.
Right, like 111 Menarun, Bangsar Hill Park. These offer larger, more opulent units, premium finishes, consequently, a higher price tag. They're aiming for high net worth individuals, families, perhaps downsizers, who specifically want that undeniable, prestigious Bangsar address and the lifestyle that comes with it.
So this split, it's actually quite smart from the developer's perspective.
It seems so. It allows them to tap into a wider segment of that affluent market. And maybe just as importantly, it reduces direct head-to-head competition among all the new projects coming online. Shows market maturation, really.
So what does this all boil down to for someone looking at this market? I guess it means the Bangsar high-rise scene isn't just one opportunity. It's a series of different plays, each tailored to different goals, whether you're investing for return or you're looking for a particular lifestyle as a resident.
Precisely. And the report drills down even further by giving us this comparative analysis of 5 key upcoming developments. These are all scheduled for completion between roughly 2025 and 2028, selected based on their market presence and, confirmed status.
How? The 5 are Bangsar Hill Park, 111 Menarung, the Lantern Bangsar, Residency 38 Bangsar, and River Park Bangsar South.
Yeah. And the report gives a pretty useful at-a-glance comparison, highlighting the key differences. They look at things like location, distinguishing between core Bangsar versus the fringe or Bangsar South.
Tenure is another big one, freehold or leasehold. That obviously impacts long-term value perception, financing sometimes.
Absolutely critical difference. And then, of course, price. The report gives the overall price range in ringgit, but maybe more useful is the indicative price per square foot, the PSF. That gives you a clearer benchmark for cost versus location and features.
Yeah, you can immediately see the spread there, right? From the absolute most premium PSF at 111 Menarung way down to the most accessible PSF at River Park Bangsar South.
Exactly. And each project also has its own distinct core concept or key USP. Its unique selling proposition.
Right, like urban resort, ultra-luxury, boutique design, ultimate TOD, or maybe focusing purely on connectivity and price point.
And to help visualize how these all fit together, the report uses something called the Bangsar Value Matrix. Just imagine a simple chart. Price per square foot on one axis going lower to higher.
Okay.
And lifestyle proposition on the other axis, maybe ranging from pure convenience up to high prestige.
Got it.